This is the Collecting Real Estate Podcast. I'm your host, Stephen Purse, here with your co-host, Bill Hamill.
I'm somewhat more comfortable collecting real estate than I am collecting other stuff. Welcome, everybody, to the Collecting Real Estate Podcast. Today, I'm excited to have a good friend of mine. We have been trying to hook up for a little bit now, and he's done unbelievable things in the real estate investing world over the past couple of years. Let me introduce Tim Vest from Harvest Property Group. He's based in Charlotte, North Carolina. I'm very excited to have you, Tim, and I know that you're at another location today doing property business, deviating from your original intent. So, let's get going. Tell us about your real estate background.
Yeah, hey Bill, thanks for having me on, man. We're down in Columbia, South Carolina today, which is an area where we own my partners and own quite a bit of property. But yeah, real estate background. So I give you the shortened version. So started in real estate around 2006. Started with land flips in the North Carolina mountains and South Carolina coastal areas. Did that for a couple of years until this little event in the real estate world happened around 2008 and 9. Things went south quickly and the bank stopped lending money and all that fun stuff. Around that time, had to clean up some things that we had going on. And around 2011, got back into active real estate, doing more fix and flips at the time. If folks remember, foreclosures and things like that were a big deal and easy to come by in around 2010 through 2012. So I was doing some fix and flips, collecting some of those as single family rentals. Built a little portfolio that we sold off around 2018, 19. And then took a little time to figure out what was going to go next and moved into multifamily real estate. So since that time, I've collected somewhere around 1,000 units, mostly in the Carolinas. Got a couple in Virginia, one in Alabama, something in Georgia. Have some partnerships with stuff in Texas and Oklahoma. Here we are today, and only multifamily and doing a little bit of mixed use and triple net as well.
Very nice. Excellent story. That little event in 2008, what was that little event? What was that all about?
Yeah, so it's a little complicated to explain what it was exactly all about. If you guys haven't seen it, I recommend what The Big Short does a really good job of simplifying it for everybody. But at the end of the day, the banks had made a lot of really, really bad loans. If anybody was doing stuff back then, you might remember hearing stories about, somebody working at a, $10 an hour job on 3 homes in Miami, that kind of thing. That was happening a lot. My partners and I ourselves were being offered, loans for way more than we could afford on non-cash flowing assets. Land, just raw land, doesn't tend to produce cash flow on a regular basis. So we were being offered way more than we could afford. Fortunately, we didn't take it up on that. But at the end of the day, those loans came crashing down. The banks had a big issue with it, and the government had to step in and bail a bunch of them out. And so there was a period of time where real estate values plummeted, banks weren't lending, and people were way underwater on their mortgages. So that whole thing came to a head, and took a few years for us to all kind of clean up.
Now I remember. It's funny, I go back, man, in the Albany, New York area, because things happen so quickly. It seemed like, you had this presidential election coming around, and then right before that election, it was like one bank went down. I think it might have been Lehman's or somebody like that. And a week later, it was the beginning of this meltdown. And I had built a sizable portfolio at that point, and wasn't, I would say, not mature enough in my business sense. I just was grappled with fear. I'm like, I've got to protect what I built. and
Yeah.
then didn't take full advantage of that recovery in 2010, 2011. It took me a few years to, kind of see what things were happening. I'm like, man, I got to get back into this.
Yeah, man. That's such a good thing. That's such a good thing to point out because I was on the sidelines for a different reason, right? Mine wasn't because I was trying to protect something. Mine was because I was trying to dig myself out of the hole I'd put myself in. And I remember thinking right about 2010, I was like, if this happens again, I'm not going to be in this position. I'm going to be the guy on the other side because I'm sitting here digging myself out a hole and I'm watching all these other guys who were just flush with cash and they're just getting stuff left and right. And they were just killing it, absolutely crushing it. And I'm like, I'm not going to be in this position again. Um, so those guys like you and me who've kind of been around that and learned from different seats at the table, right? Like you had a different view on it than I did, from where you were, and but we both kind of learned like, hey, there's opportunity that came as part of this if you were positioned correctly, right?
No, absolutely. And what I'm thinking with that opportunity, not necessarily, well, we both took advantage of the last 10 years to a certain degree. And you've absolutely crushed it over the last 2 or 3 years, which is fantastic. But just that learning experience, we're now going into another uncertain time. I know that there's, I'd like to get your opinion on that, the different characteristics of the last half of 2022 going into 2023 in relation to 2008, 2009.
Yeah, so you're kind of asking me like what's a little bit different, what's the same. So, what I would say is some of the similarities are that we did come out of like 2001 and 2 where we had this like extremely hot market, right? And some will say overheated, and I don't know that I disagree. Um, but yeah, there were some really inflated prices. Some places were seeing like huge acceleration in price appreciation and rent growth and all of this other stuff. And a lot of that was just spurred by this time. It wasn't bad debt. It's more spurred on by a lot of people were flush with cash, and then the bank was lending at 2 to 3%. Um, so we did see some of that in terms of overheated, right? The same thing we were seeing back in 2006 and 7. But what I think is different is the banks have been smarter this time around. If anybody's if anybody in the commercial space has gone back and tried to buy like just a traditional single family residence, getting a loan on some of those can be highly painful. In fact, I tell people all the time, I'm like, it's easier for me to buy a $5 million 40 unit property than it is for me to buy a single family home. I can get through that loan process much quicker. And single family homes these days are, the loan process on them is much more involved. It's not stated income. I don't get to show up and you ask me, and I get three chances to tell you the income I need to qualify for the home. So lending's a lot better. Another similarity that you are seeing right now is that lending is slowing down. Now, the same thing there, but different is that it's not stopping. Lending all but stopped in 2009 and 10. You couldn't refi to save your life. One other key difference that I'm seeing as well, because right now in 2023, you are starting to see, I'll use bridge lenders as an example. You're starting to see bridge lenders pulling back. And the reason they're pulling back is because they're not getting their capital back from people they loaned it out to. Now, when I talk to some of the guys I know who do bridge lending, one of the key differences there is like in 2010 and 11, those lenders would just call you up and go, "Yeah, I'm foreclosing on you. You're done." Today, they're working with you. They're extending. They're calling you up. What do you need? Like, where are you at? That kind of thing. So I think that's another difference as well.
No, that's a great outlook. No, I appreciate that. We've both been around a while, so I was very interested to get your perspective on that. And yes, they're still lending now on the commercial side. I think they're staring at that debt service coverage ratio. That's what the banks are going to focus on to make sure that they're comfortable lending. where I agree in 2009, 2010, it just seemed like everything just died for a year, maybe more. Going from 2010, 2011, you said that you started buying the foreclosures. I made a career out of that early on. And I think about it every now and then because I used to just pluck them off the multiple listing service. And now geez, they're a needle in the haystack. Tell us
Yeah.
about your journey getting into those types of properties, what you were able to accumulate, building up until you sold those.
Yeah. So I kind of had so I did fix and flip for a while. Just didn't keep anything, right? And one of the things that I started to learn, and this is one reason I like the name of your podcast, Collecting Real Estate, because I wasn't collecting anything. I was buying it, doing something to it, selling it for a higher price, taking a chunk of change. Um, I always call that, and I can't take credit for this phrase. Somebody else said it to me, and I was like, "Oh, that's cool." So I call it kill and eat, right? Like, so you take it down, you can go out for a nice dinner, right? That kind of thing. But what you end up with is you do it for a year, and you're like, I don't really have anything producing income to show for all that work. I just have some money in the bank, which sounds good and everything, guys. But if you're not flipping, you're not putting money in the bank. So I kind of pivoted that strategy and said, in a nutshell, for every 3 flips that I do, I'm going to sell 2 and keep 1. So I'd create some capital to buy another flip, keep it, that kind of thing. And over the course of some time there, I can't do the math in my head right now, maybe 7 years. Ended up collecting, I think around 10. I think by the time I sold, I was at 11 single family rentals. And that's kind of when it dawned on me, hey, this doesn't scale very well, at least for me. Um, and I wanted to move into something that scaled a little bit better than just single family houses and stacking them on top of each other. I also wasn't getting one of the things that some folks might realize is when you're doing just a single family, and you're trying to put property management on it, sometimes those property management fees are a lot higher than they are on multifamily. Because you're asking a property manager to manage this ad over here, this asset over there. It's not, 20 units in one place. So those fees would have eaten me up, and I just couldn't get to a point where I was handing that off to somebody else. So yeah, right around the time that we got rid of everything, I think we were up to about 11.
Nice, nice. And I bought small properties throughout my career, and I always explain it that they did what they were intended to do.
Yeah,
And understanding getting into larger multifamily, I look back and I don't like to, I have no regrets, but sometimes I think, man, I wish after experience in the last 2 or 3 years, because I've done some good deals, man, I wish I did this 10 or 15 years ago, just because of that scaling aspect of it. And what does it happen where you just kind of towards the end of that part of your career, you were just building up reasons, not scalable, and other reasons why, hey, we need to make another move into multifamily.
yeah. There was definitely other reasons, and part of that was some people don't know this, but the idea that syndication is just this broad thing that people do, that's really not that old. That hasn't been around that long. Like syndications, the concept of syndications have been around a long time, but just masses of people doing them hasn't been. Um, so around that time, one of the other, non-scalable pieces was my my capital. I was doing everything with my capital. And at that time, I just kind of said, you know what, if I want to go bigger, I think I'm going to have to bring in partners and find access to more capital. Um, I come from a 23-year IT career, and I've worked for startups before. And you reach a point in IT startups where you've got to go find more capital. But if you want to scale, you've got to bring in partners. It's a little bit harder to bring in a bunch of partners on single family stuff. It's a little bit harder to bring in a bunch of investors. So that was another reason for moving to the multifamily space. Is I wanted to be able to do it by raising capital, the whole OPM strategy, other people's money, that kind of thing. So use my own money and also supplement that with other people's money to scale bigger.
No, that's a great point. So you're W-2 career and getting into startups, you had that already in your mind, knowing that you could use other people's money to scale. So it sounds like that buildup allowed you to make that big decision, and you're now collecting a lot of larger multifamily. So I appreciate you with, you're collecting real estate. And tell us about that jump from 2018 till now. You explained that you have around 1,000 units and you realized that you needed to create teams and other people's money to make that happen. Get into detail on how you got up to 1,000 units over the last 2, 3 years.
Yeah. So uh, the time between 2018 and 19 was kind of getting out of the single family space, starting to figure out where I wanted to go next. I really started to go heavy after it in mid 2019, and one of the very first things I realized was I know how to like find properties. I know how to run properties. I know how to run teams that do renovations, things like that. I've never raised a nickel from somebody else ever, right? Like I've never done it, and I'm not comfortable doing it. I'm a complete introvert when left to my own devices, and I actually went through that period. I spent about 6 months like going around talking to like my neighbor, who's the best sales guy I've ever met. My brother-in-law, who's an incredibly good sales guy, and I actually tried to incentivize them to go raise capital for me. I was like, you go raise the capital, I'll do the deals. And that didn't work. So the next thing I realized is, you know what, I may actually have to raise some capital. So I think I better go find a guy to teach me how to raise capital. So that's when I went out and got a mentor. One of the things coming out of like 2008 and 9 taught me was I always want mentors on my side. Guys that have been there, done that, doing what I want to do. So I went and got a mentor who was really, really good at raising capital, and spent a good 6 months just kind of like listening to him, listening to what he had to say, having lots of phone calls where I just had all this self doubt in my head about being able to pick up the phone and talk to somebody about a deal I had and asking them if they wanted to invest in it. And eventually kind of got over that fear, pushed myself a little bit, and started raising capital. Got my first deal, sometime in early early 2021. Oh yeah, guys, there was COVID in there. COVID happened. And I will tell you this, in hindsight, for me, it was a blessing. And here's why. Because in 2020, deals kind of stopped for a little bit. People didn't know what was going on, and deals just weren't happening. And I got really frustrated. But at the same time, I sat down and I was like, well, if deals aren't happening, what can I be working on to get me towards my goal while deals weren't happening? So I just started networking. I started calling people. I started networking. And it seems a little counterintuitive, right? We're all locked in our house and we can't do anything and we have to wear masks, but I was networking. So that played great to this introvert, right? Like I could email, I would get on phone calls, I'd do Zoom calls. That was fine as long as I didn't have to meet you face to face, right? Um, so I started networking. I built a great network of brokers. I built a really strong relationship with some key investors. And the cool thing is when things started to open back up, when deals started to come back around, I had a network in place. Just by default, that whole dig the well before you need it thing, I had been doing that without knowing that was a thing. Um, and when I needed my well, it was there. Closed on the first deal. And then, what I would also say is like you hear this term that people use called deal momentum. Folks, it's a real thing. That first deal, it was really hard to get that first deal. And the main reason why is because nobody knew me from Adam, and nobody knew if I was just a tire kicker or a guy who was actually going to do something. And when I got that first one, it started to put some, things out there of people going, okay, this guy's actually trying to do something in this space. And then I got another one. And then somewhere around middle of 2021, we closed on a deal and we did it fast, efficiently, and quickly. And the broker was really impressed with how we performed. And the next thing you know, he's calling me up, going, "I got another one. I got another one. I got another one." And then he's introducing me to his other broker buddy here in North Carolina. And, then it just kind of started to snowball. So that's kind of how we got to where we are, is really digging that well. And then that well just kind of like producing for us, over the next 24 months, I guess.
No, I agree. Momentum is a real thing. No doubt about it. Anything in life, get that traction, get that momentum, and good things happen from there. You mentioned we. Did you have that we on the first two deals? What did those first two deals look like? And what's the start of that team approach?
Yeah, so I forgot that part. So the other part of that networking was finding partners. This multifamily thing, in my opinion, this multifamily thing goes a lot easier, a lot better with partners. Um, and that I met a guy in my first networking group, that first mentor. I met a guy in there who was in the Northeast up near you. And, we became friends. And after about 8 months, we're kind of like, you want to maybe try to do a deal together? And we said, yeah. And so we found these two guys that he was familiar with through his alumni group, and they had a deal. And they asked us to, hey, here's the here's the deal, here's the underwriting, let's go look at it. We got the deal. Can you guys raise the capital? And he and I said, yes, let's do it. So that was the first deal. That was in Richmond, Virginia. And then shortly after that, another one here in Columbia, South Carolina popped up. Same group. We took that one down. And then this guy, you guys may have heard of him. We do a show. This guy, Tim Vitale, kept stalking me, man. He was like, he was like reaching out to me. He's like, meet me for coffee. Let's chat, that kind of thing. And finally one day I was like, you know what? I'll meet you. And, I'll admit, I expect it to be like a 30-minute coffee conversation, but we just hit it off. And the next thing I know, we're literally getting kicked out by the Starbucks employees. Like, guys, we're trying to close, I mean, we've been sitting there for hours. And then Tim and I started doing some stuff together. And um, you know, I'm not gonna say the rest is history, but here we are. I got two primary partners that I do a lot of stuff with, and then we have some other partners that we work with from time to time, depending on where the deal is and what size the deal
I wish I had a guy like Tim Vitale stalking me.
is. No kidding, man. It's like, man, I wish I had taken that coffee conversation a lot sooner.
Yeah, he told Tim Vitale. He was a fantastic guest probably a couple months ago on the Collecting Real Estate podcast, and he explained that same story. And you guys hit it off in that I think he said a Starbucks for 4 hours during COVID, and
Yeah.
I think you can probably explain from that meeting till now, explain some of the deals that you and Tim have done, and some of the new ventures. I know that you guys are multifamily experts, but you're getting into other asset classes as well.
Yeah. So the very first deal that we did coming out of that coffee meeting, and guys, this wasn't like we walked out and then we did a deal, right? Like, there were many conversations after that. I'm a true believer in, if you're going to do partnerships with somebody, these partnerships can last a long time. So get to know somebody. But uh, shortly after that, a few months later, a deal came across my plate that I could see something in the deal. I knew there was something there. I just couldn't quite translate it to numbers in in the underwriting. And Tim's phenomenal at underwriting. So the first call I made when I sat there and was beating my head on the desk was to Tim. I was like, dude, I know something's here. Help me put it in this underwriting tool. And Tim just went to work, man. You're like, here you go. We can do this. We can do this. Next thing you know, this deal looks great. It looked even better than I thought it was going to. So we did it. And hey, guys, by the way, that deal is outperforming Tim's underwriting. It's doing phenomenal. Um, that deal is down near Somerville. It's in Somerville, South Carolina, near Charleston. And then we did another one. We did another one shortly after that, where I think we were driving around Alabama, and Tim's like, "Hey, there's these townhomes near Somerville. Do you want to go take a look at them?" That turned out to be one of the best deals I've done so far. And then we we did that one. We did one down in Mobile, Alabama. We did something in Statesboro, Georgia, and Raleigh, North Carolina. We've got a couple in Charlotte, and it's just all kind of come together. And Tim's been a huge key in that, as well as some other partners like Nicole Gauthier, Robert Busso, and Dennis Paulson. Great group of folks that we've met through some really really strong networking events and things like that, and spent some time getting to know. So that's kind of where we are now.
No, that's awesome. Awesome team. Awesome journey over the last 3 years. And I noticed that, you have a great social media presence. So does Tim. And I love that live LinkedIn that you guys do. It's very unique. It's
Thank
always
you.
great content. And you guys are big networkers. I know you go to a lot of events. Tell the audience just that value. I guess I can, what thought comes to mind is you stacked it very, very well, whether it be your daily, weekly social media post, your live LinkedIn, your general networking at different events. Give us the inside scoop with that.
So, full credit. I have to give credit where credit's due. So the whole social media presence, that started through some prodding by Mike Ely. Mike Ely asked me to, hey man, get on social media, let people know what you're doing. I was real resistant to it, but did it anyway. And that was one of those things where steady, consistent progress really paid off, right? Like it was really frustrating at first because you're posting every day for 4 months and nothing. Nobody responds to anything. And then it starts to pick up and gradually it takes off. But 2 years later, I have like you said, I have a decent social media presence. And then, the Tim and Tim at 10 live event, that was, again, I got to give credit to Tim Vitale on that. I was happy just posting thoughts and articles and things like that. And Tim's like, no, man, we need to do a live video. We need to do a live video. You need to show your face. I hate showing my face. So, Tim convinced me to do that. He asked me to come on, be a guest. And then he was like, hey, do you want to do this on a regular basis? Um, so between social media, kind of posting thoughts out there, good or bad, and then the Tim and Tim live thing, those have all just kind of come together to really just I guess provide some sort of transparency. That's the phrase we get back from people a lot, is you guys are transparent. Because we'll go on there and we'll talk about wins, we'll talk about losses, we'll talk about places we're struggling, and we find that people seem to really connect with that. They're less skeptical of us because we are open about when we don't do a good deal. We are open about, man, I lost $30,000 on that one, that kind of thing. And it's not just about, hey, look at my $300,000 check or anything. So I think that's been the big key right there, is just being willing to talk about whatever's going on, to be honest.
No, I like that. It brings you did an episode, geez, it might have been a year ago by now, who knows, with, where Robert Musso was on. You guys
Yeah.
had just done a deal and you were explaining how Robert was, I believe it was Robert, where, the seller wanted to keep some storage at the property that he just sold you. And you guys had that discussion of, yeah, what's the big deal? He's a reputable guy. We did a nice deal with him. What's the harm in this? Where Robert's like, yeah, we've got to, it's black and white. We've got to be by the book here. Tell us about that story, which was, which was a challenge for you guys right after you bought this asset.
Oh man, like Robert's going to see this episode. He's going to call me and go, "I know, I told you, right?" Like,
Robert's a
like
smart
Robert,
guy.
yeah, he is. He's guys. He's been doing this a long time, and he's bought. We down here in the Carolinas, most of our stuff is like 1990s, 1980s. Robert buys stuff from the 1800s, so Robert knows a thing or two about old assets. So he's been around the block a few times, and we're sitting at the closing table on this property. And I had just come from the property, and I was like, man, that garage out back is full of junk, right? Full of junk. And we're sitting at the closing table, and the seller is like, can you give me 30 days to clear the garage out? Because they had cleared the house out. They didn't get to the garage. And me being me, I was just kind of like, yeah, he's a good guy. He comes well recommended, stuff like that. He'll do the right thing. I was like, he'll do the right thing. He'll get it cleaned out. And so, we needed the garage as staging because we were full gut renovating the house. We could not start our renovation until we had access to that garage. So, fast forward and at the closing table, Robert's like, no, man, like we shouldn't close until he cleans it out. And I'm like, no, 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 no. He'll do it. He'll do it. Right. And also sitting in the garage, guys, was a 1939 Ford Phaeton in mint condition, which is a very cool old car. Turns out what the seller really wanted was to get his car out and then leave us all the crap.
Surprise,
and
surprise.
he did exactly that. When 30 days later the car was gone, I went and checked on the property. There were tires, cans of oil, paint, marine batteries, old air conditioners, you name it. Anything that was difficult to dispose of because it has to be done the right way was sitting in that garage. And I call Robert and I'm like, the guy did not empty it out. He took the car, he didn't do it. He's like, I knew it. I knew he wouldn't do it. and
I
so
was
I
right.
got it. Yeah. And he was. And you know what? But here's the thing. Like I was like, you know what? On me, I made that call. I'm calling the guy. I'll have the conversation with him. And I did. And it was like the day after Christmas, and I'm in my driveway telling the guy, you know, get the damn garage cleared out, or and the funny thing was is you talk about pushing people's buttons sometimes, because on the phone he goes, technically when you purchase the house, anything in it is yours. It's yours. And I told him, I was like, well, then bring the car back and we'll call it even. And that's the kind of the one that made him stop and go, I'll get the garage cleaned out. So a week later, garage was mostly cleaned out. And we moved forward. But yeah, that was a lesson learned. Sometimes it's good to have partners that have a much more diverse background than you, or a different background than you, and sometimes they're right and you should listen to them.
No, and the seller did the right thing after a discussion. So fortunately, you took that opportunity to make that call, have that mature discussion with this reputable guy. Just sold you a deal, and he knew at that point. He's like, I've got to do the right thing. So everything worked out for you anyway, and I was looking at something else last night, one of your more recent episodes of the Live LinkedIn, and it was the gentleman who is the master of raising money. And I've raised some money over the past 2 years, and I know you've done that also. But based on you and Tim's reaction to this gentleman, and I was doing the same, sitting in my family room, tell us about just that value of the same information you might be pitching to a potential investor, same information, but how you frame that language makes such a big difference.
Oh yeah, and he's at a whole nother level, right? Because I struggle with it as well. In fact, we had a deal last year that we struggled to raise on because we came out of the gate completely wrong, right? We came out of the gate pitching it the same information this way, and that was a lesson to us. For different guy, and in this case, it actually happened to be the seller that sat down with me and was like, "Why are you even telling them that? Like, you don't. That's too much information, right?" He's like, "They don't need to know that." And so he had a conversation with me about just speak to the specifics of the deal. We're going to take the rents from here to here, right? And that kind of thing. So that was a lesson. And then, but yeah, you're absolutely right. If I go to you and I'm talking to you about, would you like to invest or things like that, it's framing the information in such a way that creates, that kind of hits on people's, not hot buttons. What am I looking for here? It kind of hits on people's, the things they're looking for, right? And for me, it kind of all ties back to, like, when I have initial conversations with investors, I always kind of say, well, what are your goals? Like, what are your goals? What are you trying to accomplish by investing? Because, and part of that's for me to understand what they're looking for, because I don't want to waste their time by bringing them something that they're not going to be interested in. So, I know that I have this group of investors that are looking to preserve wealth and hit an average of 7% or something like that. So the deals that line up with that, that's where I go with them. And that's the things that I focus on when I pitch to them, versus I have another group of investors who don't care about the 7%. They want big appreciation. They're very happy in their W-2 jobs. They're not leaving. They just know that 15 years from now, they want to go sit on a beach and they're looking for appreciation. Um, so those types of deals, we'll take over there. And then it's how you frame that message to them. It's like, hey, look, this is a 2.3 equity multiple in 4 years. Is that something you'd be interested in? That kind of thing. And then the guy that we had on the show the other day, man, he's taking it to a whole nother level. In fact, Bill, like, I'm pretty sure before we launch our next deal, we're going to be calling him up, telling him, all right, let's take this out. Let's take this out the right way, right? Like, what do you
And you,
recommend?
you explain this here and there, who, not how, right?
Oh
Sometimes,
yeah,
when you have a volume of deals that you guys have done, it's so important to have smoothly run, seamless deals, or not just necessarily, you guys are expert at operations, but why not get some help, getting to that closing table? And he's a perfect who.
yeah, absolutely. And those are, that's been a key in our being able to scale. For me, I'm not one to naturally go find who's. I like to figure out how. It's just in my nature. But after sitting down for 10 hours trying to developing a website, 10 hours I could have been doing something that produces income. I could have just paid a guy $400 to do that website. And he would have done it in 2 hours instead of the 10 I spent, right? And guys, I know how to code. I'm developer background. So, that's a big key, right? Is that who, not how. And in this case, our who might be a guy who has expertise in how to launch deals the right way, how to frame the message the right way, and save us some time. So, like that deal from last year, instead of it taking us 5 months to close it, it may have taken us 3 if we would have talked to him first.
Absolutely, because you guys are doing a volume of deals. I mentioned this to Tim Vitale a couple months ago, which I was amazed by his response. How are you guys finding all of these deals? You guys have done, I don't know, what you have done, 10, 12 nice multifamily deals over the last 2 years. And, I insinuated, all right, what's your direct to seller strategy? And he was like, I don't have one. So, how are you guys finding these volume of deals?
Yeah, so I've coming out of the flipping world, I tried to bring some of that direct to seller stuff that we do in flipping to the multifamily space, and there are guys out there doing it, and they're doing very well. Javier Hinojo is an example of that. He does it very, very well. I don't. Building direct to seller takes a system, it takes a process, it takes money, it takes a team, and a lot of times that team is a job in and of itself to manage. So we went down that route for a little while, and after me wasting about $24,000 building that team, I just said, this is not effective. I'm much more effective building direct relationships with brokers. I want, boutique shop brokers, not the big, the big houses, but boutique shop brokers in our select markets. And I want to have very, very good relationships with those guys. And that's where we started. Because, again, who, not how, right? Like, why am I figuring out how to build a direct to seller campaign when brokers already do that, right? They're already cold calling all the time. And so, we spent time developing those relationships with some key brokers and built very, very deep relationships with them. And that's probably been the biggest piece of our success. And then the same thing again was building direct relationships, strong relationships with our property management teams. Because here's a little fun fact: property managers tend to manage a lot of different owners' properties, and they know when owners are tired of a property, And when they start to sense that, they'll call you up and they'll go, "Hey, I think this guy is sick of this. He might be ready to sell." Um, we've gotten deals that way, and then through closing attorneys as well. We've had some attorneys tell us, "Hey, I know a guy who might be ready to sell some property." So those have been our main ways to find things.
All right, there's the secret sauce right there, and I can appreciate that. I've had my best luck over the last 2 years with a very, it doesn't get any smaller than this firm. He's an appraiser, but also a real estate appraisers are also real estate brokers.
Yeah,
they're interchangeable if they choose to, and it's just a one man operation. He does the direct to seller calls. And
yeah,
fortunately, we have a great relationship where if he has a seller interested in selling a deal that fits my template, he calls me. I'm the first guy and the only guy that has that first opportunity. And it sounds like you have that same type of relationship.
yeah. Absolutely. Tim and I we've had some relationships with some guys now who, to your point, exact same example. They'll call us as they're driving to a property to have that first conversation with the owner. And they'll say, "Hey, I think this is what we're getting ready to go get. I'm getting ready to get this under contract. If I do, are you interested?" And that's literally first look, right? Before he even has it under contract with the seller, he knows if I'm interested or not. And it helps him too, right? It helps him with that seller conversation. He can say, "Hey, I got two guys lined up ready to go." You know,
And it's funny you say that because I'm picturing myself when you do get those phone calls, and we always talk about enjoying the process. And I'm an operations guy too. That's what I've done for years and years. But I think, and I never really thought of this, that's one of the most enjoyable parts of the process when you get that call and you know that they're just calling you exclusively. They know you can close deals, and you're going to be the guy or the team that gets that first opportunity on a deal that or have a pretty good idea. Okay, here's a good one.
yeah, yeah. And guys, it gets to a point where it's hard to say no because you're like, "Oh, this is a great deal." It's forget the fact that I got four others that I'm trying to close out. I want another one, right? So that's you get to a point where you actually got to start being cognizant of that, right? And honestly, that's you mentioned we did 12 deals in 2022, and right around middle of November, I called Tim and I was like, "Man, I'm exhausted. I'm absolutely exhausted." And I was beat up and I was exhausted. And so that was a lesson in 2022, right? Hey, sometimes you do have to just say, "Whoa, whoa, whoa, this is where we're going to hold up," right? Because it's real easy to get real motivated, real excited, and just take things in. And they were all good deals. They were all very good deals. But we're learning as we go, and trying to keep those lessons in mind as we move forward, into 2023 and 2024.
Wow, those are great problems to have. So many people are
Yeah,
looking for a deal where you're able to either do your deals yourself, or you have such a large network at this point. I'm sure you're able to figure it out somehow where you can have a lot of who's still have position in that deal without having to do so much work. Before we get into these final three questions, I want to ask you, and I just saw you start mentioning this barbaric yawp. What does that mean to you?
yeah. So I do a lot of stuff on social media, and I've always had this affinity for the poem that's in, and there's a line in there where it says, "I sell my barbaric yawp over the rooftops of the world," and it's basically, we're all individuals. We all have something to share, right? Something unique to bring to the table, and I've always kind of felt that way. And when I was struggling through my corporate career, being very, very like unhappy, sitting behind a desk, working for a big, faceless organization, um, I always really struggled with, these ideas of entrepreneurship and things I wanted to do as an individual. and I wanted to get out there and do my own thing. And that's kind of what Barbaric Yacht is all about is, you know, you don't have to sit in the corporate world. You don't have to do things that are considered traditional, right? Like, I don't know about you, but when I graduated, actually, I do know about you because you and I had this conversation. But when I graduated college, it was you go to college, you get a degree, you go work for some company, right? And that's how you did things. And I just, Barbaric Yacht's about, man, screw that. That's not the only path. That's not how it has to be. It can be more like Bill Hamill's path, or some of these other guys that are out there who say, you know what, forget this. I'm going to go over here and do this on my own. And that's kind of what Barbaric Yacht's about.
No, I love that, and that's going to create that freedom that real estate does for us. And for me, I was in that restaurant. I didn't know anything about real estate, but fortunately, I read that book on real estate investing, and that changed my life to go down this path. This is the Collecting Real Estate podcast. They say you have to have 3 of something to make a collection. So we're going to end this episode with 3 questions for you. Number 1, in 5 words or less, what's the most important thing you've learned since collecting real estate?
Partnerships and networks are key. I think I did it in 5.
Bam! Number
Right.
2, what are your 1 to 2 year personal goals?
Yeah, so my 1 to 2 year personal goals are to get more selective in the deals I do, and to start to expand more into the triple net space and supplement my multifamily with that.
Wow, they're not personal. That sounds like all business. Let's talk about the next Iron Man.
Oh, the next Iron Man for me, man, that's that's a ways off. What's funny, Bill, is like you're where you're doing stuff I was doing like 8 years ago, and you're still crushing it. Like you're just absolutely crushing it. And I just finished a 3.1 mile workout on the treadmill, and I'm struggling. So um, those 26-mile run days are kind of behind me right now. They may be down the road in the future, but no time real soon.
No, I appreciate that. I was more crushing it probably 5, 6 years ago. I've got to get that hunger back. I still love to do the endurance stuff, but I gotta train harder to get back to those PRs. It's been a few years. Last question for you: how can we and the listeners assist you, and how do we contact you?
Yeah. So for assisting me, guys, I love conversations. I learn something from everybody I talk to. So reach out, let's connect, and let's have a conversation. And to do that, hit me at tvest at harvestpg.com. That's tvest at harvest, P as in Paul, G as in George.com. You can always find me on LinkedIn or Facebook. And those are the best ways to get in touch with me.
Awesome, Tim. Fantastic guest. Excellent conversation. I always really appreciate talking to you. And if anybody really wants to see how to do this type of volume, he said he just did 12 deals in 2022. Contact Tim Vest. Follow him on all the social media platforms. Thanks again, Tim.
Hey, thanks, Bill. Thanks for having me on, bud.
My pleasure.